Hey everybody, Chuck Barone. Friday, March the 31st, 2023, last day of the month, and boy did we get some interesting stuff across the wires today. Data, interesting stuff, guys. Great week for the markets. Pretty good week for the American economy, I guess. Anyway, before we start the show, as always, we want to welcome you guys. Thank you for your support, for watching the videos and supporting the show. We appreciate what you guys do. So markets today. We'll close out the first quarter with stock market and a nice rally again. Dow up 415, S&P up 58, NASDAQ up 208. NASDAQ has its best quarter since 2020, best quarter in 3 years for the NASDAQ. Stock market, earnings still hanging in there. This inflation picture looking a little bit better. Jobs kind of cooling off, although not by much. Consumer spending still going. Consumer income's up, but not dramatically. So it's just a perfect storm of good stuff for the markets today and pretty much this week. We'll see now what happens, what next week brings, right? Bonds today, pretty much just not a big day in the markets, but yields coming down. The 10-year down 6 basis points, 3.49%. The 2-year down 5 basis points at 4.04%. So, rates just kind of where they are, coming down a little bit. I think the expectations now, this market looking at some of the data that came in today, feeling like the Fed's going to have some options. So people placing their bets on maybe having a pause, bringing yields down. The dollar today up very small, but breaking a losing streak, 102.57 on the dollar index, basically where it's been hanging out for the past couple of weeks. Metals today, mixed today, weird day for metals with gold down $10.40, $1,970.10 for an ounce of gold, but silver rallying up 13 cents, $24.04. I was reading today that people are starting to doubt the strength of the dollar now. We've been talking about $2,000 gold, $25 silver. Looks like if this dollar comes down in any way dramatically, the rally in metals could be much, much more than that. Oil today up again, another rally for oil today, up $1.23, up above $75, now $75.60 per barrel. Hopefully this is going to calm down. Oil prices are just crazy. They don't really have much rhyme or reason to them. There's not much change in demand that I've seen. Not a lot of data coming out that really drive oil higher, but nonetheless, here we are. Bitcoin also rallying today, up $440, 28,403. Solid numbers for Bitcoin. Looks like it's really going to it looks like it's got some pretty good support. I think the trend for Bitcoin might be up here. Now, don't quote me on this. I'm certainly not an investor in cryptos, but it looks like the trend is up for Bitcoin. Certainly some support at these numbers, and I'm happy for that because I know a lot of you guys viewing this show are holders of this stuff. I'm glad to see you guys doing well with it. News you guys need today? Well, it was an interesting day. We got data coming in from the Fed and their PCE. The personal consumption expenditure thing or whatever. It says inflation coming down. This is the one the Fed goes by. They don't like the CPI number so much, which typically is higher than this PCE number for some reason. I guess the CPI takes weighs more heavily housing stuff than the PCE does. But anyway, inflation coming down. So this PCE shows year-over-year inflation 5%. The core coming in at 4.6. So inflation continuing to come down. But these are the numbers the Fed uses to measure inflation in this country, especially that core rate, because that excludes energy and food. I think that I'm happy to see this stuff. I don't really, I'm still shocked by what everything costs these days. So I don't really know how much stake I put in these year-over-year numbers like this. How much was it up before this 5% gain year-over-year? It just seems like these numbers don't mean a lot. We need to see some meaningful change, and we're starting to see some of that, but not in the grocery store so much yet. But anyway, inflation targets, inflation numbers coming down, giving the Fed a little bit of a break. They may pause in May. I still think they're going to bump that extra quarter. You know, this data is pretty far away from May the 2nd, so we'll see what happens in between. But this does give the Fed a little bit of breathing room, a little bit of flexibility. And we also got consumer spending and consumer income numbers both coming in higher. Consumer spending up 0.2% month over month, translating to about 2.5% spending increase year over year. Income's up 0.3% month over month, adding up to about 3.5% increase year over year. So income's continuing to rise, but not at the pace they had been, right? Last month it was 0.9% on incomes. So income's still rising, but coming down at the torrid pace they were at. Also, this is good news for the Fed. You know, it shows that the consumers are still spending, even though a lot of them are borrowing to do it, which will keep the economy going. You know, they're not freaking out at these higher rates. They're still continuing to take on debt. Income's up, but not as much. Up enough maybe to be noticeable to a consumer, but not up enough to really be a big driver of more inflation. So, interesting stuff coming in. As I mentioned, I was reading some articles today. They're speculating now on the dollar. Will the dollar probably start coming down as the Fed nears this hiking cycle they're in? So we'll see if that actually happens or not. I got to say, the dollar right now, where's the competition? I mean, there just really isn't much right now, especially the currencies the dollar's measured against on that index. We'll see where it goes. I don't know. I mean, it looks like right now, it looks like everything really kind of wants to go now. It looks like, you know, stocks want to go run. Looks like the bull might be back, depending on how the data comes down. Bonds rallying again as well. The dollar holding strong. Silver and gold doing really well. Oil on the rise. Bitcoin on the rise. Looks like there's just a lot of money sitting on the sidelines waiting to make moves in all of these. So I think we're on the threshold of, if you can make your choices correctly, we might be on the threshold here of moving from an ultra defensive position, ultra defensive position as far as your investments go, to something a little more aggressive. We'll keep an eye on that. You know, it looks like, we don't want to miss a big rallies, but we don't want to get stuck in a bear market rally either. So we're going to weigh it heavily and closely for you guys. And any changes, we'll, of course, let you guys know about it. Wrapping things up today for the week. I was reading an article today, made me laugh. I'm calling this the Asshole of the Week Award. It goes to McDonald's President Joe Erlinger, a really obviously wonderful and nice guy, who was having a little fit about a proposal in California to pay fast food workers $22 an hour. Of course, that's just horrible for business, would cause prices to go up, blah, 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 calling it costly and job killing. And of course, it's the worst thing that could possibly ever happen. $22 an hour is a pretty big number for a fast food worker. The average wage at McDonald's, all inclusive, is $11.96 per hour. So that 22 would be a pretty big jump from around $12 per hour, right? The reason I call this guy the Asshole of the Week is because in 2022, he pulled in $7.4 million. Now, I don't mind anybody making money, man. I'm big capitalist as there is. If I could make $1 billion in a day and do it ethically without hurting myself or anybody else, I would be looking to do it, right? But this is really out of line because they were working it up. So check this out. If you were going to get that $22 an hour at McDonald's, and you were going to work full-time, which these corporations, how great they are at giving everybody part-time stuff so they don't have to pay benefits, right? But let's just say it's a perfect world. You're getting $22 an hour, and you're going to work 40 hours per week full-time. It would take you 162 years to get to $7.4 million that this guy earned last year. So, again, not to sound like Charlie Socialist here, because I'm not. It's just astounding to me where a guy making $7.4 million can freak out about a guy making $15 or $20 an hour. The public doesn't blink at a CEO getting paid $7 million, $12 million, $15, $50 million a year. Hedge fund guys making billions of dollars. The public doesn't blink. Give a working stiff a raise, and oh my God, it's the worst possible thing that can happen. I don't see it that way, guys. These executives, they're just so greedy and outrageously paid and spoiled and out of touch with reality, man. This guy think $12 an hour, people can live on that, really? $480 a week? Before taxes? Just out of touch, man. More evidence of the haves and the have-nots, the disparity between them, and it's getting worse in this country. It kind of sucks. It really does. When I was first starting out, you had a real opportunity. And if you were really a guy that was willing to work hard and you were clever and, you made your plan and stuck with it, you were going to be, over time, you would succeed and get the things you wanted. Nowadays, it's so much harder, so much more difficult. There's so many more obstacles in people's way. And the funny thing is, it used to be the wealthy supported the middle class moving up the ladder. Now it seems like they're just so friggin' greedy. They want all of it for themselves. And they want to keep the middle class dumb and getting dumber. They're just much more easy to control, I guess. But anyway, I could start off on a rant on this stuff. I don't want to do that. It's Friday. Let's move off onto the weekend, guys. Let's have a very good weekend. Enjoy your time with your family and your friends. Relax. Let's get away from work. Let's get away from the economy and politics and all kind of the stuff that we have to think about during the week, and enjoy the weekend. Get some rest and relaxation. We know next week's going to bring us, hopefully it'll bring us as good a week as we had this week, guys, really. And we'll be here to report it for you every day. Have a great weekend. We'll see you on Monday. Until then, take care. Thanks.